quick introduction. My name is Matthew Spoke. I'm the CEO, one of the co-founders of Nuco. We're a Toronto-based blockchain company, and we've been doing a lot of work around building kind of enterprise infrastructure using this technology. And really glad to be joined today by John, who's responsible for innovation and enterprise delivery at the TMX Group, who, those of you who may not know, is the owner of the Toronto Stock Exchange, as well as a number of other large asset exchanges across North America. John, maybe you can start by just giving us some context on what you do at the TMX and why you guys started paying attention to blockchain.
I get to play with fun stuff. Well, I guess you could say the question that people always ask me about is about the innovation agenda, but there are some important elements that is under my remit. And these are things like portfolio governance, project management office and the business office, vendor management, vendor procurement, and that kind of stuff. But a lot of times people will always come and ask me, well, tell me about TMX's innovation agenda and what we're doing. And so a lot of our time has been really been focused on trying to dictate and architect a digital strategy around how we go and execute on it.
Okay. So we're going to walk through a couple of topics today. We wanted to start really by painting a little bit of a vision of the future, and specifically around how do blockchains change exchanges. And probably two driving questions here. One is the role of exchanges in the future, or maybe the more contentious question, is there a role for exchanges in the future? And secondly, I think looking at kind of two classifications of assets. We've got our traditional assets that people interact with through traditional financial markets today, and how do these get migrated into blockchain systems? And alternatively, how do these new forms of digital assets that we're seeing kind of emerge between cryptocurrencies and other forms of digital assets, how do they make their way into the mainstream? So John, maybe you can walk us through your view of, let's say, 10 years from now. What are exchanges doing? What do they look like? How have their business models changed, if at all?
So we've just started on this journey to actually think about what the exchange ecosystem could look like, and TMX's stance has always been one of a global position, and so we're trying to kind of reimagine what a marketplace could look like for your traditional assets, but new ones like ICOs, for example. And how the exchanges could really look to modify its business model to take that into account. But the one thing that we can see, if you go back into the 10-year mark, is global connectivity. I think it's going to be huge. I think you're going to see a lot of those border friction points, ease off, and I think you're going to see cross-border movements happening in a lot more or higher frequency than you see today.
Yeah, I think one of the analogies we talked a little bit about was the idea that, rise of the internet in the 90s, and what we saw was a huge disruption around the media industry, and how local domestic media companies, let's say the Wall Street Journal or the New York Times, that used to really capture a local market, all of a sudden had this opportunity to capture a global market. And those who had not prepared for it or were not well suited for that change kind of lost out, because now you can be sitting in Shanghai or Singapore or Johannesburg still reading the New York Times. And I think what's interesting about this trend is that exchanges start to eliminate this concept of geographical boundaries and this concept of how do assets flow across the world.
Yeah, the other thing, if you think about the S-curve of innovation, the history of what an exchange was doing, it used to be an open outcry model. There used to be a pit with lots and lots of traders, which you would see in the typical movies. And yes, that still exists in the world today, but a lot of it's gone electronic. So if you think about how the exchanges moved in the last, call it 10, 15 years, and where it's going into the future, you can see another revolution or another transformation looking to take hold.
Yeah, okay. And for those of you who are less familiar, I wanted to just give you kind of a quick glimpse into a simple way of how we look at the blockchain. And really it comes down to how do we connect entities, whether they be domestic entities or global entities, and how do we then build kind of interesting new processes and applications on top of these networks, so we can eliminate a lot of the frictions that John was talking about, whether it's one exchange where there's frictions going through clearinghouses, there's frictions going through broker dealers, but then a completely different layer of frictions when you go from one exchange environment into another exchange environment. And what we're starting to see with blockchains is that you can really start to pull these away. We're in the process of designing not only how do you build blockchains for a closed ecosystem, but how do you get blockchains to connect to one another? And that essentially becomes the elimination of what are these points of friction. I think one question that you obviously have to get asked often is, what are the challenges today that you think blockchains can help solve? So where are those points of friction that we're starting to put some work on?
So a lot of the friction points, if you look at it, it's almost like a cake where you've got multiple layers. There's obviously the technical layer, which is the actual, I'll call it the plumbing, that allows and enables the business to operate. But you also have the business model. You also have the commercial model on top of that, and how the businesses would work. You have the interoperability play with our participants and our customer base. But on top of that, you also have to look at the industry as a whole, and you really have to look at the cultural shift of how people are working today. And if you think about the models in which they've operated, this is not something that you can easily shift overnight. This is something that you need to take a look at and say, how do you move the people in lockstep with the technology in order to actually make it happen and make it real?
Yeah, okay. Now, we announced a few weeks ago a project that we're working on together in the natural gas industry. So maybe we can start there and give a more concrete example of specifically in natural gas. Let's give some tangible process steps that we thought were essentially unnecessary frictions in the process that we think we can solve using this technology.
Yeah, for sure. So, at the TMX, we've taken the approach to do the same thing. We wanted to look to see how we can go and prototype and experiment. Obviously, the first thing that people will come and ask me is, hey, you guys have this thing called a depository, and isn't that just one big giant ledger? And then, of course, the answer is yes. Hey, you can go and blockchain that. Yes, it's also
I think that was our first conversation.
Yes, and it's also one of the most difficult ones to actually do, because if you look at it purely from a technical position, sure, you can go and look at that, but the reality is that if you want to make it real and you want to actually get it to a production environment, you can't look at it from just that one vantage point. You really do need to take a look at it at a holistic level. So when you think about that, the exchange space is a highly regulated one. So it's not like we can just go and tip these things over. The depository does about $1 trillion worth of asset exchanges on any given day. So that's not something that you can really go and gamble. I mean, that's a lot of value that's being moved through that system and that platform. So to actually go and pick the depository as the very first use case for an emerging technology like blockchain is probably not realistic. Although it's the unicorn, it's the star on the Christmas tree.
Yeah.
But to start with that one at the very, very beginning would probably not be the best approach.
Sure.
But if you think about some of the other areas around that and all of the other use cases that we've looked at, you've got the regulatory environment, you've got the legal environment, and then of course the cultural implications of what the disruption could potentially mean to the people involved. And you really need to take all these things into consideration to find out just how viable some of these prototypes can be.
And I think this is why we started, like the use case that we're showing, why we started here, because there was an obvious inefficiency that doesn't really trip over a lot of these challenges, these regulatory challenges, these culture challenges. It was really, you've got a scenario where there are multiple participants that have to negotiate over a deal, have to flow gas through a pipeline, and they're keeping different records of that on different systems, and all of a sudden, if something happens, you got to go through this really, really crazy manual audit process, right? So, it was an easy starting point. I think that's why we started there, and I think you're right. I mean, the long-term moonshot is, how do you go and rebuild a depository with a blockchain? Or maybe remove the need for a depository with a blockchain. But we can, talk about that a little bit more. And this topic aside, natural gas aside, I'm really curious to get your thoughts on not only what does the exchange landscape look like in the future, but what specifically is TMX going to do to make sure that it's relevant in that kind of future state as exchanges kind of shift?
Well, our president and CEO, Lou Eccleston, he started out in this transformation activity for the TMX group in, I'll call it late 2015. And 2016 was really the year of the execution for TMX. And if you took a snapshot of how the TMX group looked even 12 months ago to what it looks like now, it's drastically different. And the reason for that is the transformation activities started with the people. And so we had a massive organizational change. Innovation was not a priority in the past, and everyone realized that this needed to be front and center. And so a lot of exploration and innovation, the top-down message was, you're going to go and do this because this is essential to ensure the viability of the exchange, to see how we can evolve and transform, and to move forward along with a lot of these technologies.
Yeah, okay. So what do we have to solve? I mean, obviously there's technical challenges the industry is solving, we're solving. What else is there out there that needs to be solved?
There's definitely no shortage of problems, that's for sure. This technology, the one thing that I will say, and the previous session, from Bank of America talked about it a little bit, but if you think about blockchain, machine learning, artificial intelligence, et cetera, a lot of these things, as they're emerging, the applicable use cases are vast. And if you look at just business process management, that alone, there's several areas where you can go and look for significant operational savings. Robotic process automation as well, that's something that is worth looking at. These are all efficiency plays at the end of the day. They're not necessarily going in and going to drastically change everything per se, but they're definitely a start to create the foundation to how you can go and evolve new products and be able to actually explore new mechanisms or ways to actually go and facilitate trading. So, I mean, these are things that we have been toying with. You mentioned it earlier, you talked about the viability or the relevance of an exchange in a decentralized world. And there are elements where that is somewhat true, but if you take into the context of the real world with things like the governments, the whole aura of trust, multilateral agreements that we take care of on behalf of the participants, you're actually potentially shifting an inefficiency that may be there from a technology standpoint, but actually shifting it into another area. And so if you look at it from a full stack perspective, just imagine a world without an exchange, and if you play that out, you can actually see these trading counterparts having to have multilateral agreements with each other. That's a lot of overhead. And you can also have the conversation that, yeah, sure, I can go and trust that party. And there is an onboarding process that's required. That's still an inefficiency. That's something that we've solved for. So if you really, really look at it, is that really something that makes sense? Yeah. And so, my firm view is, absolutely, I still think that there is a role for the exchange in the future, albeit I think it'll be very, very different.
Yeah, and I think one of the things we hear a lot in the blockchain industry is decentralize everything. And I think although you probably can decentralize everything technically, there are absolutely things that have been centralized for more than just technical reasons, right? There's a layer of trust put into institutions that I think people take comfort in, even if the technology is there to eliminate the need for that trust. And I don't think that'll ever change. I think we're really looking at how do you redefine, how do you get involved in transactions rather than are you involved in transactions, right? And you mentioned earlier, obviously you're a very heavily regulated organization, as with any exchange of your size. One thing that I found particularly interesting when I started down this path of doing blockchains, when I was at Deloitte at that time, was the fact that at first regulators I think got really scared about this. It was Bitcoin, it was negative headlines, it was Silk Road. But the more we looked at it, coming from a background of compliance and regulatory reporting, this really seemed like an enabling technology for regulators, because I could start to create real-time compliance, real-time reporting, real-time anything, right? Give a view to a regulator of what's going on in the market on a minute-by-minute basis rather than on a quarterly reporting basis.
Depends which compliance officer.
Sure, yeah, but I just wanted to get your perspective on what reaction have you gotten from regulators? Does it look like they're thinking that way? Does it look like they're more hesitant? Are they going to get in the way of this change?
So I shared your concern when we originally started on this, but I was actually pleasantly surprised that it was very, very well received. I think the multi-provincial regulators, at least in Canada, have been very, very open to speaking with us. I think the communication levels or the collaboration between the regulatory bodies and the exchanges has never been as good as it is now. It's been very, very positive actually, and the TMX has announced several prototypes in this space, and we've done this in concert with the regulators, and they're actively involved. And so, I'm pleasantly surprised. Actually.
That's encouraging. So, I'm going to take a minute just to do my own personal shameless plug about what we do at Nuco. And, this is obviously really relevant to the work we've been doing together because the TMX has been our first ability to actually put this to the test, right? We're going through real life scenarios with, real markets, real assets. And what we've been focusing on as a company since we started was how do we bridge that gap? How do we take these really exciting technologies that are gaining huge amounts of momentum in kind of the open source public domain, and how do we bring them into a format that can be consumed by enterprise? And that's what we've been focusing on building, specifically zoning in on the security and performance and privacy aspects to be able to build a technology that can scale. Because what I think a lot of people didn't realize in the early days of Bitcoin, when everybody was talking about displacing banking, is that banking has to operate at larger than 20 transactions per second for it to run. So there was all these unsolved problems, right? And I think there was a kind of a naive perspective on what this technology was in the context of like established industry. So that's where we've been putting our efforts as a company, and where we've been putting it to the test is with this project with the TMX, and we're really grateful for that. Now I wanted to give a little bit more tangible, because one of the themes of our conversation today is how do we take blockchains through to production. And I mean, by the end of this chat, I'm hoping to get John to sign a contract on this on stage. But
on stage,
on stage,
okay.
Yeah. But one of the perspectives we wanted to share with the audience is a little bit of a tangible example of what it is that we've actually been building and why is it powerful for the user. And then in this case, it's the operator inside the exchange. But maybe you can talk first about what is it about working with a startup, specifically working with us, that kind of appealed to you? You mentioned that you've got other projects being worked on. We won't mention those vendors because they're not relevant. In this context, they're very relevant in general. But what was it about working with a startup and working with Nuco?
What I'll say is, as we look to try and formalize a digital strategy or an innovation strategy and how we would actually go and approach this, one of the things that became very, very clear was how do we actually go and learn what we don't know? The exchange is a 150-year-old organization. It is heavily siloed. It is a group that is learning to work together as one unit. And so when you think about layering in innovation on top of that, what is it that we don't know? We really didn't know. And so when we tried to develop an overall digital strategy, the first thing that we wanted to try and identify was how do we work with different types of models. And so one of the prototypes, which I won't go into too much detail, is a consortium-based approach where we're working with other organizations similar to ours and trying to understand how a global interconnectivity world would look like. Another one is going with your default vendors that the big guys, if you want to call it that, and how they are actually adopting this type of new technology, and how can we learn as an enterprise organization to actually create agility and move forward. But at the end of the day, we're a relatively medium-sized organization, but we're an enterprise. And so if we want to be agile and we want to be quick to market, who better to learn from than a startup organization? And so how are we going to understand how a startup operates? We go and partner with one. And that's why we went with you guys.
Great. So I wanted to share a little bit about the use case that we've been working on, because I think what's really interesting is a lot of people that have maybe a limited understanding of what's going on in the blockchain industry and why it's relevant. And what we were able to do with the relatively simple use case, to be honest, was was to drive a significant amount of valuable data into the hands of the users. And in the context of what we're showing here, I'll break down a couple of aspects that we focused on. One was, we're looking at post-trade settlement of natural gas, which really means tracking the flow of natural gas. And before we had gone through this, blockchain or not, there was a certain amount of information that just wasn't accessible to the operators of the exchange. Like, I remember the process of showing this, and maybe you can speak to it better than I can, but.
Well, I can tell you this much, that this, the real-time part of this is what blew my business away, because while we did have this data, it was not something that you can actually get in real time, and the amount of manual effort to actually put it together in a format like this would just completely outweigh the value, because by the time you got it, the data you would have is completely irrelevant or redundant. And so when we embarked on this initial prototype to actually look to see how blockchain could be used for natural gas flows, when Nuco came through and showed us this real-time dashboard, the business was extremely impressed, because this is not something that we were able to see. And to put things into perspective, this business and how they're actually capturing this, a lot of it's very, very manual. So if you can imagine a daisy chain of Excel spreadsheets to actually go and track the successful movement of a natural gas unit from the well tip right to the consumer household, and the amount of intermediaries in between to actually get that piece of, or that unit of gas over to that home so that it heats that home, you'd be amazed at the amount of manual overhead to actually go and track that. And pipelines are just like any type of technology. It's not 100% guaranteed. There are breaks, there are faults, there are halts in the flow of natural gas, and the governments take that very, very seriously, because the last thing you need is to find out that you can't heat your home because there's no gas. And so these things are met with a lot of regulatory controls, and there are penalties attached to it. And being able to track that in real time is a huge advantage for not only the operator, which is NGX in this case, but also to the intermediaries and the participants, because being able to capture that sooner would reduce the amount of fines that you would theoretically have to pay. And so there's a huge benefit from that perspective, not to mention the data visualization capabilities that, because you've now been able to track all of the information, it's something that typically we haven't been able to do in an efficient way.
Yeah, and I think one of the objectives that we were working on was not only how do you make the data real, how do you make people have access to it on a real-time basis, but also how do you control who's entitled to see what, right? So, you've got multiple parties on a network that are, in some cases, competitors to each other, in some cases, only responsible for particular jurisdictions. If you think of a regulator, for example, that regulates natural gas flows through the province of Ontario, then they should only be entitled to see gas flows through the province of Ontario. But you're operating a system that crosses the continent, right? So how do you give granular control to the point where people can be given access and see that real-time information? And one of the objectives was to take this concept of like finding out about a fault in the system 2 months later sometimes, down to the hour it happened, right? And how do you get to that near real-time information so that people can act on errors sooner, avoid penalties, avoid the financial liabilities involved?
Audit and compliance love that, by the way.
Yeah, and I mean that was another thing that we looked a lot at, was this concept of audit trails, right? When you track a flow of gas and the ability to granularly point to the record of that flow of gas as it's flowing, I think coming again from a background in audit and traditional accounting, this is a process that in that world is sample-based, right? In this world is 100% coverage of everything that you ever touch. You can have certainty and confidence about. And I think there's an enormous amount of power behind that. It's obviously the reason that firms like Deloitte are so heavily invested in this space, because it's important to their business as much as it's important to the businesses that they audit. Tangibly speaking, we're talking about 10 years from now, we're talking decentralized exchanges, a different role in the market for the TMX, how do you get there? You know, Bank of America right before us was talking about this concept of a 3, 5, 7-year kind of milestone.
No, they kind of stole our thunder there.
Yeah.
Yeah.
So how do we get there? What's next?
Well, it's a very similar approach, actually, surprisingly. I mean, we realize that, you know, you can't go after that unicorn day one, you know, so what are we going to do? We're going to experiment, and we're going to experiment quickly. We want to look at minimum viable products. It really is changing the way we operate. If you think about the old-fashioned, typical waterfall approach where you spend 4 months dictating, you know, a 300-page requirements document before you actually drop a line of code to actually start building something, that model is shifting and it's moving away, and you're looking more at agility and rapid.
One, I mean, for context, the first phase of the project we did together was a week and a half of gathering requirements and 5.5 weeks of writing code. By the end of like a 7-week period, there was a functional piece of software, right?
And that was one of the criteria was, you know, we needed to execute these prototypes in a rapid manner. They can't cost a fortune. They can't run over years. You want to have a scope identified. You want to talk about what the business value or the business benefit assumption is, and then you actually go and build on that to actually go and prove it out. And if it is there, that's when you start looking at how you extend it to production.
I think, you know, last thought that I'll leave with the audience, broader than just in the context of TMX and what's next, is kind of what's next in the industry for blockchains. And I think we hear a lot about companies building private blockchains and siloed blockchains and public blockchains. And I think, you know, the gap has been, you know, if everybody builds their own blockchain, you end up in kind of a new version of siloed systems, right? So, you know, where we see the technology going and where we're working on is kind of the interconnectivity, so that as the TMX works at modernizing its own markets in North America, and as other exchanges around the world work on modernizing their markets, that there is the ability to connect and to bridge these things in the future. And I think, you know, fitting that into the context of multi-purpose, multi-chain environments, I think is what's going to let us get to that potential in 10 years.
Yeah, absolutely. I think if you look at any type of standardization, that's something that's essential in order for this to actually happen. And I don't think it's, you know, something that you can take for granted. There's definitely won't be a case where it'll be one blockchain for the entire world. I just can't see that happening. So you really need to look at how you have, you know, multiple or different types of blockchain technologies being able to interconnect with each other without actually going in and, you know, screwing something up in terms of its integrity or its data privacy, or even, you know, something as simple as its sequencing. And I don't think we're quite there yet, but I know that this is something that's being discussed, and I'm hoping, you know, in terms of the rapid pace of the changes that are happening in this space, I'm guessing by the end of the year they'll have something.
Well, stay tuned. We'll let you know. Anyways, if you're interested in learning a little bit more about this, John and I are going to be sticking around for the rest of the day, so we can be happy to show you some of this stuff in real life. But anyways, thank you for your attention today. It's been a pleasure. Looking forward to continuing our chat.
Thank you very much.
Thanks, John.